Hello, folks. How are my favorite people doing? That's right, the traders that follow us and follow me. I'm Student Alpha, your favorite research analyst, technical analysis hitman, and we're about to go over some charts, but we're going to do our weekly update. I want to talk about some catalysts that hit this past week because we had a lot of movement in the markets. For this first week of February 2026, the Dow Jones crossed 50,000 for the first time ever. Even though the other indices struggled a bit, we'll go over that. But the Dow Jones over 50,000, that's a surge of over 1,200 points. Pretty incredible. We also had the Warsh shock. So that's Kevin Warsh, the next federal chair appointed by Donald Trump, triggered a historic rout in commodities. He's regarded as a hard money hawk. His nomination led to the deepest and steepest decline in precious metals since 1980. Silver collapsed nearly 41% and gold fell almost 21% from their late January all-time highs. Um, as traders brace for kind of his more aggressive monetary policy. So stronger dollar, which means weaker metals, although there's some other stuff behind that. And stay tuned. I'm going to talk about it. We also saw the big four hyperscalers, Meta, Microsoft, Alphabet, and Amazon. Um, there was a lot of AI capital expenditures they where we had dropped because investors are nervous about these guys and their in massive increases in their AI infrastructure. I mean, Amazon alone is forecasting $200 billion in 2026 for capital expenditures. That's 50% more year over year, which spooked investors. Investors um, sold their companies, leading to that whole midweek sell-off in kind of our Meta, Microsoft, Alphabet, Amazon, some of our tech companies. Um, Also gives concerns over AI timeline profitability. Now, interestingly enough, we're going to talk about in this report some of the AI trades we follow that dropped, even though these big four said they're going to spend some money. So we'll get into the technicals behind that, guys. So stay tuned here. Um, the also on macro, U.S. Iran de-escalation talks, geopolitical tensions have kind of eased with U.S. and Iran agreed to do non-mediated talks in Muscat, Oman. So which kind of subdued oil price, Brent oil prices also, I think, near the $56 range. Other things, the Fed holds rates steady. They did not do a cut recently. And anyway, with Warsh coming in, maybe he's going to do a cut. There's some uncertainty there, when and how many there'll be. But it's right now, the current Fed is saying it's a wait and see approach. The January's job reports, guys, the non-farm payroll released Friday showed a moderate, modest gain, estimated around 68,000 to 70,000 jobs. While not really a blockbuster number, guys, it's enough to reassure investors that the economy wasn't failing into a recession and helping spark the rally that we saw on Friday after slumping midweek. And we'll talk about that again. Also, another catalyst that kind of moved the markets this week was the Russia-Ukraine negotiations in Abu Dhabi. Remember, war brings uncertainty and usually sells off the indices. At least initially, long-term war is good for the indices, and then fear raises metals. So anytime we're talking about war, it's definitely going to move the markets. ISM manufacturing data come out this week. It remained below 50, which is in contraction territory. This kind of tempered the run it hot trade that had been dominated in early 2026 and forced out a rotation of speculative growth stocks into real economy value stocks like Caterpillar. Right. So if you follow the ISM, and when that data drops, usually, guys, we see that move it in the futures market. ISM usually drops on the week that's going to drop at 10 a.m. on its scheduled day. Bitcoin flash crash and rebound. It tumbled just above 60,000 for the first time since 2024. And then it was a violent rebound right back to 70,000. And it was kind of amplified by a broader risk off mode earlier in the week and then subsequent short squeeze during the Dow's record breaking run. So there's a high correlation between those two because so many funds now own Bitcoin, Ethereum, and some of the top ones. So those are kind of macro points that we saw this week and what moved the market. So let's really look at the technicals, folks. So we'll start out with the indices. I'm going to talk about the Nasdaq. All right, the Nasdaq. So the white line shows us everything that happened this week. Prior to that, I talked over multiple weeks. If you follow me, how we were just in this critical breakout anchored VWAP from this low in September on that throwback last fall, and the all-time high after it says we were range bound, right? Just very range bound, caught in between those. And then previous week we had a really strong test of that all-time high, although we didn't hit it. We were in the range and then got rejected. We tried to climb again and then really sold off hard. Um, Thursday, Wednesday, Tuesday. And then that hard rebound, right? We had the hard rebound going on to Friday and we regained the range that we were in. So the close back into this tells me that we're probably going to be range bound again, guys. So this was an exit closed, one candle closed filter of the range, and then one closed filter back in. So really, on a greater timeline, that's even going to look like a false breakout. Okay, what are you saying, Student Alpha? What are you saying? Basically, now we've re-entered this, we're probably going to be caught back in that channel to look like this, where we're going to need volume to break that resistance, or we get volume to break now this level. So looks like we're going to channel with bullish intent, right? So the S&P 500, kind of the same thing, guys. We sold down, we broke out of this slight channel. But if you remember, if you follow me and watch this videos, this uptrend, this long bias uptrend on this range is intact still. Like even if I stop it there, right? Because we exited and re-entered. We didn't really take out this low to have a change in trend. So I would expect with volume, we have a really decent test of this 7,000 range again in SPX. I would contend it's probably not going to break the first attempt again, which it didn't here, or I'm sorry, the next attempt in the upper part of this. Probably get a sell off and then back through, right? So again, looking bullish, we came back on trend. Really, Friday's lift in the markets kind of saved our midweek slump. Okay, this midweek slump was really driven partially by some of the big mag stocks that were getting beat up that we talked about at the opening of this video. Russell 2000 January effect was in full swing. I mean, move this to here. That's last Friday. We sold down after towards the end of the January, and then we did exactly what the other indices did. We sold off kind of midweek, and then a hard rebound on Friday. I personally traded this Friday New York Open, and we made a lot of money buying this bounce in the Russell 2000. So all that to say is we're back on trend. I anticipate outside of any catalyst, we're going to challenge this all-time high, but it wouldn't surprise me if we get trapped in here between 26 and 2700 for a few days before it makes a decision to go in either direction, guys. Those are two critical key levels that we try to exit and we re-entered. This zone it's going to stay trapped in until it makes a high volume decision to exit. And when you come next week and watch my weekly update, you'll know what it did, right? So those are the indices. Like I said at the beginning of the report, the Dow set an all-time high at breaching 50,000 for the first time ever. So let's get into a few stocks that we monitor. And if there's a stock that I don't put on this, these are mainly ones I trade and the ones that I talk about. If there's one that you're interested in, if I get enough people interested in, you put it down there in the comment box. We'll definitely take a look at it in my next report. We'll do technical analysis for it. So Google, make sure I have the correct day. I do. As you remember back here, or if maybe you didn't, previous videos, I said my area of interest is right here. Uh, Basically 299 to 319. If it dips into that area of interest, I see it as a buy. Um, Nearly did over a week and a half ago, but did this week. Breached right into that area of interest. And if you bought it anywhere in there, you're in the money. A trade plan on this, guys. I really think that if you bought this and you want to continue to run this up, at least to the all-time high challenge or higher, you need to have a stop loss just outside that zone. But, your risk is your risk. Kind of make sure you have a trade plan that is appropriate to your risk, but this gives a very clear trade plan. Buying close to 300, you can set a stop loss on the other side of 300 by a couple, $3, $4, $5, whatever's comfortable to you, and then run this thing back up. I believe, and unfortunately, uh, or fortunately, in the YouTube world, these are recorded, so you can go back and see how wrong or right I was historically. But I think Google, outside of some great catastrophe that could happen in the markets, Google is going to be your clear winner this in 2026. I think they're going to take a lot of the market share. So actually, let's leave that on there for next time. We can see how that plays out. Oklo, need to adjust this level. I haven't adjusted it yet. Why? Because that's the all-time high anchored VWAP, that red, and that's going to be our resistance zone, right? Let me make sure this is in the correct spot. It is. Oklo, off the last time we spoke, that I anticipated to watch for support in this green area, kind of 70 to 75. And really, with this sell-off this week, it fell through that. Now, interestingly enough, when I did some meetings with some traders, and we talked about Oklo when it clearly fell through this with high volume, as you can see here. I said really keep an eye on the white line, the IPO anchored VWAP, because that is the average volume or the volume weighted average price since IPO, and that's going to be very tough to break, at least initially. So your discount range right now is if it sees 57 to 60, I really like it there. But as it were with the rally, let me make this a green box so we can monitor it. Okay, that is created by those two anchored VWAPs. I use many more technical indicators than this, but anchored VWAPs are the first tool I throw on the chart, especially for fast analysis because they're so reliable. But if we re-breach this area and we cross upward, clearing that level, that 70, 75 level is still a strong buy signal, even though we fell out of it with some momentum. So I like it down here 50 to 50 or 57 to 60, and I like it, low 70s, right? But there is clear overhead resistance at this $105 mark, 100 to 105, because 100 is a key psychological amount. So a purchase in here, you could consider a stop loss in around again, guys, this is for entertainment only, right? This is how one might proceed to trade it. You got to do your own due diligence. Your risk is your risk, right? But as you can see, a purchase in around this area, you can put a stop loss below the IPO anchored VWAP, or if you need to be tighter, you go below what is known as this pivot swing out of it, this kind of swing low right here at 61. So you're going to either be, we'll call it 57 or 61. That could reduce you by $4. And then you're going to target the all-time high, which is $36 of profit for $8 of risk, either $8 to $12 of risk. That is going to be a 1 to 4.5 or 1 to 3 risk reward ratio, which is pretty good, but you're definitely going to trail it as it goes into money to lock in profit. That's how you do all trade planning. I'll leave that one on there as well. There you go. MP materials still hasn't given a clear sign. I like this lower level that we've consistently talked about here on these weekly updates, kind of around the $50 to $54 mark. And then overhead resistance, that red line. Anytime we see that red line, folks, that is resistance, right? That is the all-time high anchored VWAP, and you can see the all-time high is way up there. But so your next buy signal or your buy would be in this discount, or clearly if we close like this candle did above that and we hold, that is another good buy signal, right? But you're thinking, well, that's not until $65 and it's 60 now. Wait the five damn dollars to be more certain it runs up, right? You're going to pay $5 for confidence in the trade, right? In this middle range is kind of tough right now, right? I like a buy on support, like what you see down here in the green box, or a two candle close filter of that area, 65 or somewhere down here around 50. So what you can do, guys, is you can set alerts. Did you know that? You can use TradingView and you can set alerts. You go over here, you scroll on the numbers where you see the plus sign, and we'll get it close. Click the plus, it'll set an alert. So it will tell me if it touches that area. If I'm not going to chart, I could estimate this, but look, you could actually click on the anchored VWAP, right click, add alert on an anchored VWAP, create it. See that little clock? I now have an alert if price touches that. Isn't that wonderful that you don't have to go stare at a bunch of charts? You can set alerts and you can actually tell this thing in your settings up here to, hey, send those alerts to my phone. If you download the app, right? It'll alert on your charts on your desk, and it'll alert to your app. So you actually get a message, which is great. I love doing that. I love setting alerts, helps prevent me from staring at charts. You should too. All right, let's get into some of the quantum and AI. The sector just got the dog shit beat out of it this week, guys. Which is surprising because when you had, four of the big companies saying we're going to spend a lot of money in AI, you would have thought that AI um, would spike. But here's how it works, guys. That would be speculative. You They don't start spiking until you see that money rotate from those big companies into these AI companies and it shows up on their earnings reports. That's when the real money's made, right? One thing is speculation, the other one is proof, right? We've spent the money, um, or we've gained the contracts, we've gained the money, we've received the payments, and that's going to be good for it. BBAI. I stayed in this trade by the skin of my teeth. I talked about this one time. I own a bunch at that green line. I did size in my final allocation at the gold line, so it lowered my DCA. But my stop loss, look at this, guys. Looky, my stop loss is right here. At market hours, I missed my stop loss by a penny, 1 cent. Actually, pre-market, it breached my stop loss. But because my order is set good to cancel, but not extended hours, it's only going to trigger if it's a market hour. So I stayed in this trade barely, and I'm still in it, and I will continue to stay in this trade. And you can see that analysts still have this forecast between $6 and $8. Actually, when it gets up to about $8, I'll raise my stop loss. It needs to clear this level up here. We'll call it 7 to make it even in order to really break this upper channel. It first has to enter this channel again, and then it needs to break it, right? So this long time support is now actually, believe it or not, guys, it's resistance. That's right. Once support is broken and flipped, it becomes resistance. So this is where you can see all this consolidation. It'll actually be a little bit higher to include these wicks. It's going to be sticky getting through that. But once we clear $7, I will raise my stop loss to probably break even. We get up into $8, $9, $10. I'll start trailing it by whatever I will chandelier it, whatever the daily ATR or average true range or trading range of the stock is. And I'll keep you updated. That's why you come to the weekly update here with Student Alpha, right? So Pony's no different. You can see it's sold off. Actually sold last week through that IPO and all-time high anchored VWAP, which should be strong uh, support. It was a number of times, but with that velocity down, it fell through. We found support at the lower range. It didn't sweep this low, which is good. I think this bodes well for Pony holding up here against that drop. We would like to see more volume come back into this lift. So without volume, we will not break that kind of that 14.89 to $15. Probably not the first shot. We might come up here and kind of tap it and then have to do it again with volume, right? So really the critical number here to watch is where my cursor is, where there's the white and yellow lines. IPO, an all-time high anchored VWAP at 1491. A daily close above those will bode well for this thing, re-challenging kind of $18 range. And then above that, 20. So you want to watch that. And guess what I'm going to do, guys? Yeah, I'm going to set an alert just like I showed you. I want to know. There you go. Analysts have this, guys. And when I say analyst, I am an analyst, but I'm part of a professional group of analysts who make these determinations, and they have it between 15 and 29. I first bought it at 13 and sold it at 21. I don't currently own it now, but I am watching it. I would like it if it closes above that level. I've put a lot of allocation in QBTS and BBAI. So, and speaking of QBTS, let's get to it. This one also dropped pretty hard. I own it in two accounts. It kicked me out of my one account for a 300% gain at this red line here that you see is my stop loss. My other account has it right here at the bottom of this box, kind of 1350 is my stop loss. Analysts have this between 12 and $48. Of course, $48 was just under its all-time high. But the technicals on this one, guys, it sold off hard, and this is a nice strong rebound. But when you see strong rebounds, you want to see really good volume. Now, this volume swept the weekly volume, which is good. But I would like to see larger spikes like you saw here to really promote us upward. We have overhead resistance. We need to adjust this box to follow those two critical anchored VWAPs. But if we get this could be deemed as a buy signal. It's an aggressive buy signal. We get one more candle close above that. But I've said long on my my morning Instagram reports, so you can follow at Student Alpha One on Instagram and at Student Alpha on YouTube. I do a free 9 a.m. Eastern Standard Time market report, and on that report, I've called this, uh, you know, $19 to $21 range, the buy zone. Now we fell out of it, but once you recross it, it's still a buy, right? So it's in that buy range, and you would want to target or be aware whether you target or not, that kind of $28 is resistance. So there could be an $8 trade. If you wanted to look at a short trade, again, do your own due diligence on this. But a buy in here, you put your stop loss right below that swing low. We'll call it 1675 and try to run it to for $8 profit. So you got $3 of risk, $8 of profit. Um, but really, if you're a long-term holder of that, you need to stay. If it ran up to that, you could go break even, have no risk in the trade, hope it holds, and then breaks again. If it doesn't, you get kicked out, zero cost in your trade because you want to try to hold this long, right? If you're playing the quantum or AI thesis. So there you have it, folks. IONQ kind of really sold hard um, with its peers, but I want to show you something. Even though analysts have this between 47 and 100, and its all-time high was only 84, analysts see this as a really beneficial mover. It it ran in this channel. In our previous videos, I said it was only channeling. It didn't give a clear signal. Now it has. Do you see that white line? What is that? If you followed me long enough, you know. It's the IPO anchored VWAP. And guys, to the number it held, look at that. So if you wanted to set up, again, for entertainment purposes only, put your money where you've decided. But a buy, that's a closed filter of that. If you can buy in the real body there, you just put your stop loss right below it. Then you can run it back to the bottom of this channel or to the top of that channel. There you go. See that? So a buy in around 33 to 35, stop loss we'll call it at 29 to 30, and you're targeting 19 to $20 on that trade. Pretty good risk reward ratio there, guys. That's a 1 to 4. We like a 1 to 4, 1 to 5, especially, right? In standard trade planning. QUBT, Quantum Computing Incorporated. Looks the same, doesn't it? Fell out of this channel and is re-entering the channels. Because right now, this zone is kind of resistance, although I don't think it's going to provide a lot. I don't think it's going to reject out of it because you can see that green line I put on it on this chart that I had talked about in previous videos being the support line. Closed below it, we got rejected off, it closed below it, and then we got rejected right at it. If it re-enters that, then I think we're going to head into this channel again. Well, Alpha, you just said that about the other AI stocks. Yes, they operate in the same sector, and it's not surprising that they move the same. You'll learn that, right? So you have market pressures will move stocks. You have sector pressures will move stocks, and then you have individual catalysts of the stock and its company that'll move it, right? So if we get a close in this, and we'll say above 375, let's say, that might afford me an opportunity to enter a trade plan with a stop loss at like 775 to or 770 to 775 and run it back right back up to that all-time high anchored VWAP. That's a tight risk reward ratio. You're looking at $2 risk for $5 reward. Not as attractive as some of the other trades where they're 1 to 4 and 1 to 5. So you could reduce your risk to try to get a more appropriate ratio or hunt a higher price. Although I'm here to tell you, hunting a higher price, when this thing runs up, it will not break that level the first time. This is recorded. You heard it here. It will not break it. Now, we could break it after that, but that's going to provide too much resistance its first attempt. All right, UUU. Now, I want to talk about this bad boy because I've done Instagram Reels for it. This is uranium. The Trump administration is looking to put a lot of money in nuclear, which uranium benefits. We like this, guys. This is a classic cup and handle. Now, I've had some smart ass folks on the internet that think they're technical analysis. See the difference, technical analysts see the differences. They watch some YouTube videos and think they're experts. I actually went to school for it. I actually passed the test that only 20% of people can test or that can pass when they take it. 20% of people with master's degree and 4 years of work on Wall Street can pass this test. That means 80% fail. Not passed level one and level two. So I actually have the education on this. So for you smart Alex that are your YouTube experts who are watching this video and think that you can out technical analysis explanation me, it's not going to happen. See, because the difference between you and I is you watch YouTube videos and I actually went to school. I don't know if you not showing up well on camera, but that is about 18 inches thick of books that I had to study, had to test, had to know, and I passed tests that nobody else can. I hold a certification that very few people worldwide hold. So take it as it were. You can listen to the YouTubing watching experts, or you can take it from somebody that actually is an expert. So UUU, the argument is, well, that's a double top. Okay, so we're gonna, because I'm a loving human being, I'm gonna do a free educational course here for the people that think this is a double top, or trying to tell me I'm a fool for calling this a cup and handle. Okay, double top. Yes, there's two tops there. All right. The difference between a double top and a cup and handle is a cup and handle is a bull formation. Bull, BOWL. You can see how this is more round. See that? We would expect in a double top to have a V in it, right? Very sharp drop, very sharp increase. We don't see that here. We see kind of more round price action. Okay, that's one indicator. Now, the second one is the first anchored VWAP here, all-time high anchored VWAP, is what sets the handle, the base of the handle on a cup and handle. So here's your cup, and then on a cup and handle formation, there'd be the handle, and then it breaks upward, which it's exactly measurable how high that goes. I'm, I'm not even going to explain it. Just believe me, it goes bullish. All right. So if this were more of a V pattern and it was a double top, this price, if it declines, we don't even know it's a double top until it breaks that neckline. And when it breaks that neckline, it is very predictable that it drops. But that's not the formation. Guys, it's not the formation. This is a cup and handle. So I put this trade plan on there that if it occurred, that's what you would do. And guess what? My last video, it was here. I said your trade plan is you're going to buy close to that all-time high anchor VWAP with a risk comfortable to you, and then you're just going to ride this bad boy up. It does need to break, we'll call it $28 in order to accelerate, but I don't see any reason why it doesn't do that. So there you go. UUU is a buy. Do your own due diligence. You click the buttons, you make the decisions, and you YouTube experts take some notes from somebody that actually has the paper. All right, let's get into metals, guys, and then we'll wrap it up. Thank you for joining me this week on our weekly update. Gold. Now, listen, in the beginning of the report, I said there'd be more to there's so much manipulation in silver right now by the bank, JP Morgan Chase. There's a bit, the Shanghai Futures Exchange caught six firms, one a billionaire trying to throw additional paper into the markets and shorting it. JP Morgan is doing it. JP Morgan's been fined $920, slap on the wrist for the hundreds of billions of dollars it made. So it's a very manipulated market right now. Although, and I talked about this um, in our weekly meetings, not the recordings, but the weekly meetings, that on the drop and rebound, gold was stronger than silver. And let me explain it to you. Let me start with silver. This will make sense. So we're going to go to the 4 hour because this shows us really clearly. All right. So from our drop last week, so this is there you go. from our drop last week. Silver dropped 41% or $50. It rebounded to the all-time high anchored VWAP to the number. Can you see that right there? Right there, that red line. Let me see if I can see that. Then rejected back down. And on this rejection right here, I warned and alerted everybody that this was a bear half-mast formation, one of the most reliable formations in all of technical analysis. Okay, this is on the 4 hour. It was back tested and proven through research on the 14-day, but the fractality markets still hold it true here. So what that is this is one leg of the pole. This is the uh, either pennant or flag in the middle of the pole, kind of the half mast, and then you measure the rest of the pole below it, which I've done. This is actually a copy of this drop, another 50 points, which measures down to $42 from that high at the all-time high anchored VWAP. And guys, I want to tell you here, I alerted everybody on that formation. And then as towards the end of the week played out, I was 100% correct. This acceleration down was fast. Matter of fact, we dropped down to almost $63. And that is when the Shanghai Futures Exchange stepped in and banned 6 firms from short selling. Otherwise, this was going to 42. When they banned them and took away the short sellers, it was able to automatically rebound and go back on its natural trend to go where physical silver is, which I think, as of the filming of this, physical silver in Asia is around $98 right now. And we have spot at 78. So we're currently known as what is dislocation, and there's been no time in history that when it's been dislocated that it didn't relocate. So this will snap back. But my contingency is that we are definitely not out of water yet, guys. We can see this price because JP Morgan Chase is doing it like crazy. There's other firms that are trying to short us. Why? Because they can't deliver the physical silver. Normally only about 2% of physical silver is asked to be delivered on these contracts. People just cash settle. But I think over the last month, almost 100% have asked for it, and they don't have it. They've written more IOUs than they can fill. So they're trying to short this and squeeze people out of their long positions so they don't want delivered, right? So if they can flood the market with enough paper, right, suppresses price, and then they short it on the way down to make money, squeeze you out of your position so you're not long to buy, and then you don't need deliverables, then it saves their ass. That's how this works. So I don't think we're out of water on this. We're going to have to trust technicals. From a technical standpoint of view, what I see right now, guys, is because I have so many people that want to buy silver on spot here. You can buy it, 71 and a half to 73, but you have a lot of resistance at all-time high anchor VWAP at 87. So that's kind of your trade. And you can set a stop loss just on the other side of this gold line, that first drop, like, 70. Okay. If you're brave and go wider, you could use that swing low at 63 or 64. But if you're doing it on leverage, guys, that's way too much movement. So you need to do your own due diligence. But this is a potential buying opportunity. But listen, it's limited to 87 right now. I personally am not touching it. I I bought physical silver for the last 20 years. I bought even more this past week. I'm not trading the product because the CME group and the banks are screwing with it too much. Right? It is a rigged game. It's like, why would you walk into a casino knowing that every dealer in there is corrupt? There it is. But so many people ask me, but I want you to notice how this was a half mast, and then and actually, you don't want it to break 50% retracement. So actually, sorry, I went wrong indicator. I know I've got a lot on the screen, but we only bounced up to the golden ratio of 382, which is a very strong half mast hold. But I want you to notice what gold did and why I said it was stronger. What I want you to see here is that 5,000 range is right here, which is a very key psychological price. This gold line is, let me get rid of some of these green lines, right? Or not gold line. The red line is the all-time high anchored VWAP. And as I do a Fibonacci retracement, that measures the whole move, breaks it into percentage. So this pole was broken when the all-time high anchored VWAP, the 5,000 range key level, and the 50% Fibonacci was broken. We almost retraced, whereas silver only retraced to 382 percentage, so 38% of the drop. Um, Gold retraced nearly, almost 55%. So this kind of broke the formation. Doesn't mean we can't have more downside, but it's extremely weak. And that's what I predicted, and that's what I told everybody. And look what happened. That drop was weak, and it's rebounded. Now, guys, something very good about gold. We rallied and closed at or just a hair above that all-time high anchored VWAP, which will be interesting when we see open. If it busts above it, we do have resistance at 5,000. But I like it here, right? Closing above that's going to be good, but we're going to have some resistance in there. I I believe closing above that all-time high anchored VWAP of 49, if we open up around 49.75 or 80, when the market's open, I believe 5,000 is going to be resistance, but I'm pretty sure we'll probably head to 5,100 in the short term, if not back on trend. So gold is being manipulated, but not as much as silver. So there you have it. Um, Platinum. Man, it dropped hard. I like this green box for swing trades, 1900 to 2000. I'd called that before. Let me get out to the daily for you folks. And you can see the problem is it wicked way out of that and then reached back in and closed it above. So really it's the close above that you like, and we're at 2072. If we come back down close to 2000, I like that for a swing trade. I like swing trading and buying that. And then of course you run what's your price target is that red line, the all-time high anchored view up. So if you can get in around 2000, you can run up to around 2300, 2350, right? And then palladium kind of same thing. Really false wick or false break out of that level. We held above. So, 1700, you run it right back up that all-time high anchor VWAP. There's a lot of resistance. There's really only 100 points there. If it breaks that, we head on up. But remember, it has more potential in all of them because that's the all-time high, way up there at 3,400. So if you can ride the lightning in around these ranges, palladium, I believe, has more potential than the other metals. And then let's talk about our final metal, copper. All right, so copper tapped right in my buy range twice this week, my lower range. So my lower range was 45 to 65, and really 50 being the even number. Tapped it twice, and it's showing strength. It's looking good here, guys. You have to know that all-time high anchor VWAP is at 595. So you could size in here and then size in on confirmation of that break and then run it all up. The macro on this is $10 to $11. So you're not going to really care 15 cents otherwise. For some reason, if it happens, if it gets down to 540, it's a buy all day long. I like that support down there, but it really can't get through this kind of 550 zone where anytime it taps, it's a buy, right? Especially on the thesis is strong on copper infrastructure. AI is going to require all this wiring, right? And it's looking like a strong metal, and we're at or near all-time highs, whereas like palladium is not. It has even more potential, but the beta on palladium's just been absolutely crazy. That wraps up my weekly report, guys. If you've stuck with this video this long, I appreciate you trusting my analysis. Again, throw down in the comment box if there's something that you want to see that I haven't analyzed. If I get enough people that do it, I'll consider putting it on the report. And There's also links down there where you can join the group. We'd love to have you as a member where you get access to me as one of your analysts. And until next time, I'll be back next week. Have a good one, guys.